Okay, today on the show, we have to talk about this red candle on Bitcoin because a lot of people are saying to me, this is the Bitcoin reaction to the crazy hawkish FOMC meeting which we had yesterday. But that's not true. I'm going to show you in the show that this is actually something completely different. This may have to do with the Tether depeg. And even though the Tether depeg only started this morning, you can see that Bitcoin actually responded earlier. And I'm going to show you exactly what happened. So we're also going to talk about the FOMC. We have to talk about this FOMC because I think that the market should be celebrating a pause, but instead the market is actually saying it was a hawkish pause. A hawkish pause. What do you mean by hawkish pause? How can a pause be hawkish when we've pivoted from the fastest rate of interest rate increases ever to not increasing interest rates? That's what we're going to talk about as well. Then what I want to show you is I want to talk about this tweet over here because it looks like BlackRock may actually be making some moves into crypto, some bigger moves into crypto, because when you combine this tweet over here and this bit of news over here that BlackRock may actually be filing for an ETF, well, then hold on a second. We may have BlackRock moving into crypto while the markets are actually coming down like this. Then I want to spend a lot of time talking about this Tether depeg because it's a big story. Tether, the biggest stablecoin in the market, has actually depegged. I'm going to show you the depeg, but I'm going to show you also how to protect your portfolios and how you can make money in a very, very low risk way out of this depeg. So while most people are probably going to lose their money in this depeg, I'm going to show you how you can actually make money in this depeg. And then lastly today, I'm going to show you the craziest story I've ever seen about how the SEC is potentially playing us again. But this time it's like, I don't know, super blatant. So I don't know, let's go. Got a big show. All right, we're back. Let's get the music going. Let's get the energy up. If you're here, let me know you're here. Say presente. Tom Wong, presente. Come on, let's go. Tarugo, say presente. Wait, actually yesterday, I learned how to say in Spanish, smash the like button. Wait, I want to get it first. Hold on a second. One of our people told me how to say smash the like button in Spanish. So how do you say smash the like button in Spanish? She says, oh man, I lost it. Saying like dale o... Send it to me. Send it to me. So listen, if you're here and it's your first time here, subscribe to the channel. And if you've been here for a while, you know how much fun and how much alpha we're going to have here today. All you need to do is smash the like. What's it? Dale gusto or something like that. Anyway, you tell me in the comments how to do it. Presente. Guys, we do have a big show today because while we are here today, we do have Tether depegging right now. The depeg was a lot worse, but quickly let's look at what Tether is doing right now. So if you look at Tether, it should be trading 1-to-1 with USDC. And earlier today, this is what actually happened. You had Tether go to 100.4, which is quite it doesn't sound like a big depeg, but it is a big depeg when you're talking about $80 billion. And if you're talking about the biggest stablecoin in crypto. But I'm going to show you how you can actually trade this USDT. You can protect your portfolios in quite a risk-free way if you're worried about USDT. So that's what we're going to talk about today. We're also going to talk about the FOMC. We're going to talk about a whole lot of different moves by BlackRock. And then I'm going to show you some kind of mole or something crazy happening inside the SEC. All right, let's start off by looking at the markets. And specifically, let's look at this chart over here. And it just reminds us that it's becoming very, very difficult to be in crypto at the moment because everyone else is having a bull market. Everyone else is having a huge bull run. If you look at the NASDAQ, we spoke about it yesterday. The NASDAQ is up. I think we said it was up like 35 or 40% this year. 40% this year. And Bitcoin is starting to move down and not following the NASDAQ anymore. Then you look at the Nikkei. The Nikkei is on a huge, like a huge run. And Bitcoin is not following that run. And what we look forward to in Bitcoin is we look forward to times where markets are rallying and there's more liquidity in the markets. We look forward to events like yesterday when there's a Fed pivot. And that should give us a bull run, but we're not getting the bull run. And a lot of the reason why we're not getting the bull run is because of this SEC's attack on crypto. Not specifically Bitcoin, but crypto as a whole. And specifically, they're not even going after Bitcoin at all. So we're not part of this bull run. And every time that we think we've seen everything, something happens. Like we thought we saw everything with the SEC attack, and then this morning you wake up and you've got Tether being depegged. And that's like, if you were to ask me, what is the biggest risk left to crypto? I mean, you could say the DOJ charges against Binance. That would be a very big risk, which would take crypto down. But the other cataclysmic, the biggest risk by far to crypto is Tether depegging or something going wrong with Tether, because we only really have one stable coin which is growing, which is Tether. And the market cap of Tether is $80 billion, which is about 3 times the market cap of USDC. And the last thing that we can afford is a USDT, a US dollar Tether depeg. And that's what we got yesterday. So it just feels like we're really getting the raw end of the stick. On the one hand, we're not participating in any bull market that's happening. I mean, just look at this bull market in the Nikkei. It's basically like straight up crazy. And look at Bitcoin. Bitcoin looks like a very poor performing asset. So I saw this earlier and I just thought we had to share it. You know, the Wall Street cheat sheet. The Wall Street cheat sheet in crypto is starting to look like that. It's just a very, 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 very tough time to be in crypto. Every day we wake up, we get hit again and again and again. And I know that a lot of you are sitting there thinking, well, first of all, I know that a lot of us have actually left. I know that our channel is still growing, but if you look at everybody else's channels, if you look at a lot of the other big channels, they're losing viewers. If you look at the exchange volume is going down. If you look at the speculation in crypto, the speculation is going down. That is, to me, the final part of the shakeout. When everyone is questioning whether they should or shouldn't be in crypto. And don't get me wrong, I've also questioned, like, what are we doing here? But every time I do, I go back to the fundamentals. So this is what it feels like. This is what it feels like currently being in crypto. And I keep reminding myself of this. These moments, savor them. It's a depression phase, the depths of winter. The sinking feeling that maybe you were wrong, forgotten, mistaken, all for nothing. You're still doing that crypto thing, they'll say. This is actually where legends are born. This is what makes the highs high. This is where you win. And I see my friends pivoting to AI. I see my friends spending more time in AI. And I keep questioning, is this the time to be leaving crypto? But then I remembered to myself that every single time in every single market that I've seen, when people leave, that is a time when you should be the one to go all in. This is when you should be buying. I'm not saying buy blindly and buy every single dip, but I'm saying this is the time where if you have conviction, you should be buying and you should be selling the top when all those tourists that have left have actually come back. So I know it feels hard. I know we're not part of any kind of any part of this bull market or bull run. But if you do believe in crypto, this is the time where you should be readjusting your portfolios, and hopefully our bull run will come, because we're not enjoying any part of this other bull run. One thing which we didn't enjoy was yesterday, and I'll show you why we didn't really enjoy yesterday. If you look at the NASDAQ chart yesterday, so this is the NASDAQ chart. Let's go on to the 1 hour chart. Here we go. What you can see is that the FOMC happened yesterday, and a lot of people said it was a hawkish, it was a negative FOMC. Well, I don't think it was a hawkish negative FOMC. We'll talk about that in a second. But the markets also don't believe that the FOMC was hawkish, because the NASDAQ yesterday went up about 1%. Okay, now it has come down slightly today. It's about 0.7% down today. But yesterday, while Powell was talking, the NASDAQ went up. And it stayed up there. I mean, let's go on to the 1 hour chart. You'll see that it actually stayed up there until late in the night when it actually started coming down. At the same time, this happened to Bitcoin. And everyone said, oh, no, this is Bitcoin responding to the hawkish FOMC. Let's talk about the FOMC for a second. So the first thing is that the Fed left interest rates unchanged, and it was unanimous in the votes that the interest rate should be unchanged. Now, to me, that is a pivot. Specifically, when you are talking about a period where the Fed has increased interest rates at the fastest rates that they've ever increased interest rates, when they get to a pause, that should be bullish. That is a sign that Powell said, okay, hold on a second. We want to make sure that we don't break the economy. Let's give it some time and let it pause. And a pause, I guess, is something bullish. But this is what threw the market off. So during the FOMC, they do what's called a dot plot. Now, what is this dot plot? Every Fed official that is at the meeting gets given one vote. So each dot here is one vote. And they asked, where do you see interest rates at the end of 2023, at the end of 2024, and at the end of 2025. And you can see that the majority of people that voted yesterday, in fact, 1, 2, 3, 4, 5, 6, 7, 8, 9 people said that interest rates were going to be between 5.5 and 5.75%. So somewhere around 5.6%. That means that the majority of the Fed people said that the interest rates were going to be higher than they are today. And not only did they say it was going to be higher than they are today, but it's actually 2 rate hikes higher than we are now. And this is what scared the markets. What scared the markets is that the Fed officials, if you took the votes of the Fed officials, they all said that they foresee, or the majority of them said they foresee 2 more interest rate increases. Now remember, we went into the FOMC thinking that the Fed is going to pause and actually stop interest rate increases. That's what we thought. We thought the Fed was going to stop interest rate increases. Now, when the Fed officials actually start voting, they said, hold on a second, no, we think that interest rates are going to go up. So this part here shocked the markets. The other part that shocked the markets is when they asked those same people in May, where do you think interest rates are going to end? They all said between 5 and 5.25. When they asked the same people in June, they said 2 more rate hikes. So you've got a very schizophrenic Fed. You've got a Fed that on the one hand is telling you, look, we're going to pause and we're going to assess the damages and the effects of our previous rate hikes. On the other hand, we also, all of us, or the majority of us, think that rates are going to go up 2 more times this year. And none of us believe that rates are going to come down this year. Now, I have been saying for a while, I never thought that rates were going to come down this year. I kept saying to you guys, no matter what this chart over here said, I didn't think that rates were going to come down anytime this year. And now the market is starting to agree with me that there's not going to be any rate cuts this year. I also think that the market may be wrong here, and we'll only know this when more data comes out, but I think that the Fed may be done with their rate hikes. This is telling you that there is a 73.2% chance that there's going to be a rate hike in the next FOMC meeting, and that's obviously based on that dot plot. So let's listen to 1 or 2 things that Powell said, because I think we need to just listen to 1 or 2 things that he said.
We've covered a lot of ground, and the full effects of our tightening have yet to be felt. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, today we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, nearly all committee participants view it as likely that some further rate increases will be appropriate this year to bring inflation down to 2% over time.
So that's the first part of it. The first part of it, he says, look, we're going to pause. We're going to wait to see the effects of our tightening policy. We're going to continue to tighten selling the treasuries back into the market. But for now, we all think, or a lot of us thought, that we're going to continue with the rate hikes. This is the next part that is probably worth listening to.
Nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at this meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for monetary policy.
Okay, so that's the next part of it. Okay, now he was then asked about the speed at which they've raised and why they've paused. And listen to what he said here. Let me just get it first. It's about 1610. So let's just listen about from here.
It's really accumulation of our individual estimates of how far to go. I mentioned how we got to those numbers. In terms of speed, it's what I said at the beginning, which is speed was very important last year. As we get closer and closer to the destination, and according to the SEP, we're not so far away from the destination in most people's accounting, it's reasonable, it's common sense to go a little slower, just as it was reasonable to go from 75 basis points to 50 to 25 at every meeting. And so the committee thought overall that it was appropriate to moderate the pace, if only slightly. And
so that's what it is. He's saying this is the part that threw the market off. What Powell basically said here is he said, look, we're just slowing down. We're not stopping. We think there are going to be 2 more interest rate hikes this year. But for now, we're just going to slow down the rate of interest rate increases. And that's what the market started to panic a little bit. but it only panicked for a very short period of time. And as I said, the NASDAQ still closed 1% up, which shows that the NASDAQ kind of didn't believe Powell. And so I guess that is what the FOMC was about yesterday. Was it hawkish? I mean, I don't know. They also said that they don't see the US going into a recession, which is good because a lot of the analysts are saying that the US is going to go into a recession. So I guess that the fact that they're not seeing a recession is also good. And they see GDP up 1% from 0.4, which means that they see the US economy actually continuing to grow. So no recession happening. So I guess for me, a very positive FOMC. The fact that they've slowed down could mean that they've stopped. Maybe there's one more interest rate hike this year, but I don't think there's much more than that in the cards. And for me, that's a bullish thing. I think that the markets, like the traditional markets, should be celebrating the fact that there's a pause and not looking too far forward into what the Fed are thinking, because traditionally the Fed haven't been very accurate in predicting anything forward. And actually, Powell said that. I want to actually find a point here where he said we're actually not good at forecasting things. Maybe I can just find it for you. It'll take a few seconds. Let's play it from here. Let's just see if it's this part over here.
Of today's workers and families and businesses, but also for the future.
Look at the SEP, inflation is still projected to be elevated next year, but the Fed funds rate is lower than where it is now. Can you help me understand that?
Sure. So, if you look 2 and 3 years out with the forecast, first of all, I wouldn't put too much weight on forecasts even 1 year out because they're so highly uncertain. But what they're showing is that as inflation comes down,
he's also saying, look, don't put anything on our forecast. We're not really good at forecasting. So that's it. And I think I tweeted after the FOMC and I said, I think Bitcoin can actually go to 26,500. And that's what I really thought. And I left here after doing 9 hours of streaming on one day. And as I got home, this is kind of what I woke up. This is kind of what I looked at my phone, and this is kind of what I saw. And I was like, what the hell is going on? How did Bitcoin just get $1,000 candle? This couldn't have had. I see Yuri's late for class. Yuri, you will forgive you today, but this is the last time we're forgiving you. So I asked myself, what is actually going on here? And then I saw this tweet. At the time, I didn't pay much attention to this tweet, but what this guy said, he said, look, I'm keeping an eye on the curve pool 3 imbalance. It's nothing crazy yet, but it's a little odd that Tether has started to trade at a premium to USDC for a while. Okay, what does this mean? Well, this is a breakdown of curve pool 3. Now, a lot of you don't know what curve pool 3 is, but this tweet over here happened just before the drop in Bitcoin. So now you got to start paying attention. So what is curve pool 3? Curve is an exchange where primarily people trade stablecoins. So if you want to trade from USDC into USDT or from USDT into DAI, the best place to do it is a place called Curve, or where you can do it on big increments on chain without having to go through a centralized exchange. You go to Curve and you do it in Curve. Now, how Curve works is that you have pools. So you have a pool, and in this specific pool, you have DAI, USDC, and USDT, which means that if you want to swap DAI to USDC or USDT to USDC, you basically go to the Curve pool 3 and you swap your tokens inside this pool. Now, generally, what you want to make sure is that there's always enough USDT, USDC, and DAI in the pool. The reason why that's important is because if you want to swap USDT for USDC, you always want to make sure that there's enough USDC to swap into it. When someone doesn't want a stablecoin, or when a stablecoin is not desired by people, what they do is they sell all of those stablecoins into the pool, and they drain the pool of the other 2 stablecoins. So it's almost saying, we don't want this stablecoin, keep it in the pool. We want to swap all of our USDT for the other stablecoins because we don't trust USDT. And that's exactly what started to happen yesterday. So what this guy started to notice was that all of a sudden, this pool, the USDT part of the pool, was 43.19% of the pool. Now that's unhealthy. That means that there's too much USDT in the pool and not enough of the other 2. And as this progressed, as we got later and later and later in the day, what we realized is, and even now, 70% of that pool is USDT, and only 15% of the pool is USDC and DAI, which means that people are saying, we don't want USDT. We'd rather swap our USDT and take DAI and leave our USDT in the pool because we don't want it anymore. This is usually a very bad sign. This means that the market is swapping one stablecoin for another stablecoin. Now, when would you swap one stablecoin for another stablecoin? Say, for example, if you thought there was going to be a regulatory attack against USDT and the Department of Justice was going to seize all the USDT, what you would do is you would swap all your USDT, you'd throw all your USDT into the pool, and you would take out DAI and USDC, right? And what you do is you then fill the pool up with USDT and empty the DAI and the USDC. If you thought, for example, that USDT wasn't backed, if you thought that there's going to be a rumor or there's going to be news that USDT wasn't backed, what would you do? You go to Curve, you would sell all your USDT, and you would use those USDT to buy USDC or DAI. And what you would do is you'd bloat the pool with USDT, and you'd leave DAI and USDC very low in the pool. That's exactly what happened. Right now, there's 70% of the pool sitting in USDT, which means most people have dumped their USDT and they've drained this pool of all the USDC and DAI. In fact, there's very little USDC and DAI. Now, we saw this happen when Luna collapsed, when Terra Luna collapsed. In fact, this is how Terra Luna collapsed. And that's why the market got a whole lot of alarm bells. Now, what you can see here is you can see that generally the ratio between the three of these kind of remains more or less equal in most periods of time. But what happened yesterday? All of a sudden, now I think this is in hourly or 2 hourly increments. But what you can see here is that everything was fine, and then all of a sudden, people started to dump their USDT into the pool, leaving very low amounts of DAI and USDC. So almost like withdrawing all the DAI and USDC, and that caused a Tether depeg. So Tether started to depeg from USDT, from USD. And that's super dangerous, because right now there's $80 billion of USDT in circulation. Now, can you imagine what happens if all of a sudden USDT gets attacked? And that's what Jose said. He said, 3Pool is showing that someone knows something. Could it be Tether regulatory action? Could be. Well, what else could it be? So let's look at all the options. What could it be that would make people want to dump their USDT? One is if you thought there's going to be regulatory action. And if you did think there was going to be regulatory action against Tether and you thought that the DOJ was going to seize all their funds, you would want to get out of USDT, right? That could be one of it. The other thing that could happen is maybe you don't believe their reserves. I mean, they did publish their reserves. We do have a list of where the reserves are. But if you thought that all of a sudden their reserves became less backed, or the value of what they were holding, why is this not working? Or the value of what they were, let me try and refresh that, or the value of what they were holding actually went down, then what you'd say is, I want to dump my USDT because, I don't know, maybe all of a sudden, all these things that they're holding, say that, for example, the US Treasury bills collapsed or something happened here, you'd say, hold on a second, maybe they're not backed. So that's another option. The third option is something that I think is far-fetched, but probably worth discussing, and that is, there seems to be bipartisan support over a proposed new stablecoin bill in which in the US will require every stablecoin to be approved by the Fed and fully audited. Now, that could be true. And if it was true, maybe people are worrying that USDT won't be approved. Look, the reality is maybe someone knows something, maybe not. But you got to keep your eye on the fact on whether USDT is depegging. And if you do see that USDT is depegging, or if you're worried that USDT may depeg, then you need to take action on your portfolio. You need to take action on your portfolio now. Now, I'm not telling you it is going to depeg because I actually believe that there's nothing wrong with USDT. But hey, I don't know what I don't know. I don't know whether there's a leaked memo at the Department of Justice or something going out there. I do know that Paulo Arduino, who's the CEO of the company that created USDT, says, markets are edgy in these days, so it's easy for attackers to capital out on this general sentiment, but at Tether, we're ready as always. Let them come. We're ready to redeem any amount. So he did that and he calmed down the markets quite a bit. He actually even started to meme. He said Tether FUD. And we always get Tether FUD. We get Tether FUD in every cycle. We get a whole lot of Tether FUD. It's almost like the last FUD before the markets actually turn. And he says, yeah, Tether CTO says that such events are actually a good stress test. And he's probably right. But let's talk about the big question. The big question is, if USDT does depeg, or if any US dollar-backed stablecoin depegs, what do you do? Because you got a very short amount of time to act, and you've got to act really, really, really quickly. And that's what I wanted to spend time with you guys today. I wanted to give you guys probably the most important education that you've got, that you're going to get from me. Why? Because if USDT continues to depeg, and right now, hold on, that's where USDT is, it's still depegged. Look, granted, it's a tiny depeg, but it is a depeg. And we don't know what the reason for this depeg is. So if you're worried, I'm going to show you what you can do. It's very, 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 very easy. So the first thing is, if you're worried about a depeg, you don't want to hold USDT. Because, as I said, if, for example, the Department of Justice decides that they are going to seize all of USDT's assets, you may never be able to redeem your USDT. If their reserves aren't backed, you may never be able to redeem your USDT. So if you believe that USDT is going to depeg, here are a few things that you can do, and you can do them right now. And some of them you can actually maybe make a whole lot of money. So let me show you what these things are. The first thing you can do, you can go right now and you can sell your USDT into USDC on Curve. It's very simple. You go to 𝗕𝗏𝗙𝗏, you put in the amount of USDT that you have. So if you've got 1,000 USDT, you can sell it right now on Curve. It's quickly generating a quote, and you will get $997 back. No, that's not bad. I mean, you're losing $2. You're losing $2 for every $1,000. So if you've got $100,000, you will lose. You lose $250 on $100,000. To me, that's a good trade. If you're worried, take the loss. Take $250 loss and get into USDC. If you're worried, I'm not telling you to worry. I'm not worried, just for the record. The second thing you can do is you can get into Bitcoin. And the reason why I say you can get into Bitcoin is because I've been here for a long time. And I know that when people are worried about USDT or USDC, the first thing that they do is they try and get out of USDC and USDT. And where do they go? They go into other stables. But then they may not trust other stables. The same reason why USDT is collapsing may also be a reason why USDT is collapsing. So what they do traditionally is they go into Bitcoin. I've seen this many times. I saw this in 2017 and 2018. And I saw it again when USDC depegged that weekend of the Silicon Valley Bank collapse. Remember, that's when USDC depegged. People ran into Bitcoin. They want to get out of their stablecoins. They've got nowhere to go, and they go into Bitcoin. And so the second thing that you can do is you can just go into Bitcoin. It's very simple, very good strategy, works really well. You do have Bitcoin risk, but chances are, because people are all going into Bitcoin, the price of Bitcoin actually goes up. Okay. The third thing that you can do is a very simple thing. You can go to Bybit. You can go, there's a USDC USDT pair, and you can buy this on leverage. Okay, now you don't have to take the leverage. I just do it on leverage. And this is the smartest trade out there. It's the best risk return trade that I've ever been able to find. And in fact, to be honest, I took it this morning. What is the trade? You know that USDT always has to equal 1-to-1 with USDC. It can never be, a dollar can never trade at much less than a dollar unless it's completely depegged. So you know that the worst case scenario is that this thing goes back to 1, but the best case scenario is that it depegs, and if it does depeg, you get the full depeg. So if USDC and USDT decouple, and USDT is worth 50 cents, all of a sudden this will be worth $2. So what do you do here? You just buy USDC versus USDT, which means you're trading out of your USDT and you're buying USDC. Your worst case scenario is you lose 0.2%. Your best case scenario is you get the full depeg. It's the best risk-free trade out there, but you have to watch the funding rate. Okay, so right now you have to watch this funding rate, because the funding rate is how much money it costs you to hold this trade. But you can do this, and it's the best risk-free trade that I've ever seen. You just buy the perpetual, you pay a little bit of funding, and you get the full upside, but your downside is limited because your worst case is it just goes back to 1-for-1. and you've lost this little 0.2%, which is a tiny piece of your portfolio. I did some calculations. If you took a $5 million trade earlier today, you would have had to put down $500,000 in margin. The most you could have lost if it went back to 1-to-1, you would have lost $15,000. So your risk is that you would have lost $15,000. Your reward is that you would have made the full DPEG. You could have made another $5 million in the DPEG. So that's the last thing you could, the third thing you could have done. And the last thing you could have done is, it's quite a long, not so complicated move, but you take your USDC, you put them on 𝗲𝗿, you borrow USDT against them. So now you owe 𝗲𝗿, if you got $1,000 of USDC, you deposit $1,000 into 𝗲𝗿. You borrow 1,000 USDT. So now you have 1,000 USDT in your hand. You swap the USDT back to USDC. You owe 𝗲𝗿 1,000 USDT. If USDT depegs, you sell the USDC that you got in your hand and you give it back to 𝗲𝗿 and you make the profit. So go and look at my tweet. I've written the tweet over here. If it does happen, this is what you need to be doing. They are a little bit more complicated, but go through this tweet. And I promise you, if it does actually depeg, this will be the best guide that you've got to keep your money safe. Specifically number 3, you basically get all the downside leverage, all the upside leverage, but you hedged on the downside. You can hardly lose any money. So you can lose very little money. Yeah, so that's, I mean, again, I'm not too worried about USDT. I think this is just a little slight depeg, but we've got to keep our eyes open because it is a depeg and we've got to talk about the depeg. Cool. The other story I want to talk about was this tweet over here, which has been going around the internet, around how BlackRock has actually increased their share in MicroStrategy. And how this tweet was framed, it says, while the SEC is busy suing Binance and Coinbase, and BlackRock and the biggest banks in the US are silently buying records amount of Bitcoin, how they're doing it? Well, they're buying it through MicroStrategy. So, MicroStrategy holds basically MicroStrategy just holds a whole lot of Bitcoin. That's all MicroStrategy does. And what you can see is that the biggest funds in the world are actually increasing their stake in Bitcoin. So BlackRock's increased their stake, Bank of America's increased their stake, Fidelity. But I went and got an updated chart here. What you can see is that, yes, BlackRock do own 6% of MicroStrategy. Fidelity owns 6.79% of MicroStrategy. Vanguard own 8.52% of MicroStrategy. So all these companies own so much of MicroStrategy because they want a play into Bitcoin and they cannot buy Bitcoin itself. So they buy through MicroStrategy. So it does look like they are increasing their stake. And tomorrow we actually have an interview with Michael Saylor on the channel. So tomorrow's banter is an interview with Michael Saylor. And this is something that we'll actually bring up with him. In the meantime, we also saw this story that BlackRock is close to filing a Bitcoin ETF. And they'll be using Coinbase custody for the ETF and the crypto exchanges for spot market data. Now, I wonder if this is BlackRock taking advantage and going into to grab the first ever listed ETF. If they are, I wonder how they're going to get around the SEC. I really do. I want to see if anybody can get around the SEC. I do think it's going to be BlackRock. Anyway, speaking of the SEC, I want to show you something. This is the craziest thing I've seen in crypto. I've seen some crazy things in crypto, but this one is really, really, really crazy. So get this. Okay, so I'm going to read this from a tweet because I just think this tweet basically lays it out crazy. So there's a company called Prometheum, and the guy says it's got to be the strangest story that he's ever seen. It's beyond, and it is. It's the craziest thing that I've ever seen in crypto. Okay, so I don't know about you. Have you ever heard of a company called Prometheum? Ferdy, have you ever heard of them? In the chat, let me know if you guys have ever heard of a company called Prometheum. So get this. Last month, in the midst of the SEC bringing cases against Coinbase, Gemini, and giving a stiff arm to Robinhood and others, Prometheum gets approval for the first of its kind special purpose broker-dealer for digital asset securities. Okay? This is a special purpose broker-dealer for digital asset securities. Then somehow, the Prometheum CEO gets a seat in front of Congress yesterday and starts reading a whole lot of notes. Now, who the hell are you? And how the hell did you get in front of Congress to testify. Now, who's Prometheum? Well, it is an exchange that's raised $43.2 million in funding. Apparently, they have their own chain and a token as well. Is that true? Yes. They have their own chain and they have a token as well. And apparently, these guys are lawyers, right? These guys are legal guys. Okay, now listen to this. So, guy goes and he gets in front of Congress.
Does not turn on.
Now, I want to point out there's been discussion about a lack of regulatory clarity, and that's just not true. The SEC put the industry on notice in July 2017 in the Dow report. The SEC has released compliant frameworks for the trading and custody of digital assets. Those who argue that there is a lack of regulatory clarity need a lack of regulatory clarity because they can't be compliant under the existing clarified regulations.
Okay, this guy, Aaron Kaplan, somehow found his way into Congress and says that there is regulatory clarity and you just need to know what you're doing to get the regulatory clarity. He thought he was safe. Okay. And then Mike Flood had a little go at him. Have a listen.
That the lack of clarity from the SEC puts an undue burden on the industry. Mr. Kaplan, in your testimony, you were very confident that no new legislation is needed in the digital asset space to clarify this question. What has changed between the date of this letter in 2021 and when your firm called for clarity and now? What has changed?
Over the 2+ years since that time, there's been additional enforcement actions and statement by the SECs, which have clarified any questions that we had in regards to the designation of a digital asset as a security.
Mr. Kaplan, Prometheum's website says that Prometheum ATS supports, quote, many tokens that mostly trade on crypto exchanges, end quote. I'd like to dig in on that just a little bit. Can Prometheum customers trade in Ether? If your answer is yes, please explain how.
Not currently.
Can Prometheum customers trade in Bitcoin? If your answer is yes, please explain how.
No.
Just for the audience at home's benefit, Ether and Bitcoin make up more than 60% of the digital asset market. Mr. Kaplan, given that either Ether and Bitcoin make up more than 60% of the digital asset market, if the current system is working, why can't your customers trade the most popular and widely used digital assets?
Regulation and new ATSs and custodians should take a crawl, walk, run approach, and essentially they will proceed to add additional assets and abilities as time goes on. I'd like to point out when the...
I'm going to reclaim my time. Mr. Kaplan, did Prometheum receive any additional exemptive relief from the SEC that has not been publicly shared?
No.
Thank you, Mr. Kaplan. Prometheum's special purpose broker-dealer license does not address the core issue. There is not a consistent definition of a digital asset security within current law. This point was made obvious when Chair Gensler could not say definitively whether Ether is a digital asset security when asked by Chairman McHenry in this very room a couple months ago. In other words, that same question that Prometheum themselves raised in their 2021 comment letter is still unanswered. That's why legislation is needed. That's the problem that the chairman's bill works to solve. To testify in front of our committee.
First of all, how the hell and why the hell is who is this guy? Who is this guy? And how the hell did he get in front of Congress? You got to ask yourself a question. Now, here's where the theory goes. Somehow, this guy, in fact, let's go a little bit forward and just listen to what Gary Gensler said. Listen to this.
What's next?
Look, what's next in this field is we're going to continue to reach out and try to work with the market participants. My experience these last 2 years is that there are entrepreneurs and operators in the field that want to come into compliance. Some have actually registered as what's called special purpose broker dealers. Some have registered even.
Some have actually registered as special purpose broker dealer. Now, isn't that funny that this same person who no one in the crypto world has ever heard of has this special purpose broker dealer license and has been working with the SEC to get this license. Now, this is what 𝗕𝗏𝗰𝗲𝗃𝗀𝗧 says. He says, the SEC greenlit a vaporware BD ATS to pretend there's a happy path to becoming compliant. You just can't make this shit up. That's exactly what's going on here. And then Gary Gensler went on record with the Wall Street Journal saying, well, some have actually registered. There is a path forward here. The sum that he is referring to is Prometheum, a crypto company that's failed to launch a product in 6 years and that literally no one has ever heard of. I mean, this is absolutely, absolutely absurd. You want to talk about how absurd the US system is? This is clear as daylight. Who are you? How did you get in front of Congress? How did you get this license? And if you've got this license, how come no one's ever heard of you? And you can't even trade Bitcoin and ETH on your exchange. Crazy. When I heard this, my blood boiled. You can see I'm still, you know how it is. And yeah, I did want to show you a few other things. First of all, I saw this. Celsius will be selling all altcoins from all customers except custody and withhold accounts starting 1 July and converting them into Bitcoin and ETH. So you need to go and look, and we'll go and look for a list of Celsius tokens. And then just make sure that hopefully these guys will sell it responsibly, because otherwise they're going to smash the altcoin market. So this is something I'll bring you over the weekend or on Monday. Then I did see this around GMX, which is probably worth talking about, but look at their fees for the last average of 7 days. $700,000 of fees a day on average. So GMX, with all these liquidations, this is when the liquidation engines and the perpetuals exchanges actually make quite a bit of cash. I mean, I saw this, probably worth talking about. You got Bitcoin versus gold. If you take Bitcoin and you overlay it on gold, Bitcoin has outperformed gold by a steady margin of 430%, which is great. And then Hong Kong is putting pressure on its banks to actually accept crypto exchanges. So you know they really are becoming super excited about crypto. Now listen, for those of you who haven't yet got a Scallop card, there is a link below. Download the Scallop app. You may need Scallop because Scallop is it's regulated for on-ramps and off-ramps, number one. It also puts your crypto and fiat into one account in a regulated way, and then you can spend off one card, fiat and crypto. So there's a link below. Sign up to the app. There's a whole lot of countries where you actually can and can't get it. Just go check below what it is and see if you can get yourself a card. You're not going to get this card. This is a very special card. You're going to get this card first, and then after that, you'll get a card like this. So if you want to do that. Tomorrow we have Michael Saylor on Banter. So that's going to be a big show. Huge. That's a great thumbnail. What else is there? Let's quickly just take a look at the Banter bubbles, which... let's just have a look. What's going on? It's pretty red. Not much to talk about. Seriously, not much to talk about. You got Bitcoin at 25,000. Sure. Let's hope it goes up again. And we can break away from this feeling that we've had. This is the best chart that I've seen all day. This is the best chart that I saw all day. Anyway, I shall see you guys again in a few minutes on our Twitter Spaces. It's on Mario's channel, on Mario's Twitter. We'll be there from a few minutes from now. Until then, trade well, my friend.